Hello guys, welcome back again to MJ Crypto, and in this video we're going to be talking about risk management. How do you manage your risk? One of the biggest challenges every trader out there faces is knowing how to manage risk. Okay, now listen guys, no matter how skillful you are, I often say this, no matter how skillful you are, if you do not know when to close a position, then you're going to make consistent losses. Okay, what really makes a trader a successful trader is not the skills you have, it's not the technical analysis you have. You can be very skillful, but if you do not know when to quit, when to run away, or when to enter a trade, you're going to be having serious problems. A lot of you take short positions when you're actually supposed to be taking long positions. All right, and a lot of you do the reverse, and this is actually sad. So in this video, I'm going to be exposing you to different areas on risk management. And by the way, don't forget, this video is duly sponsored by FairDesk. FairDesk is a derivative exchange where you can actually trade on perpetual contracts. Okay, and guess what? They're offering you up to 600 USDT bonus when you sign up and fund your trading wallet. All right, this is for real guys, for real. I've gotten my bonuses before and I've traded successfully, and the fees are actually very minimal. All right, so now let's proceed guys. The very first thing you want to take note of is your entry. What is an entry? An entry is the price at which your order to either buy or sell is executed. Now let me go over to the trading section so you see clearly for yourself. Now this is FairDesk, and I would like to want to take a position right now. Let's say I want to actually take a long position on BTC. I'm going to put this on market and just go into the main price. Now you can see the entry. The entry right here, I'm going into the market and I want to buy, okay? I'm buying at market order, meaning I want to buy at the current market price. I don't want the price to go down before I buy. So I'm just going to click on open long, right? I'm just going to click on open long. I'm on isolated mode. Sorry, I'm using 25% of my $30 right here. So I'm just going to click on open long. And boom, I've initiated a trade. All right, you can see it clearly. I've initiated a trade. So it's going to start counting right here. The percentage gain, the percentage loss, and all that. Okay, you're going to be seeing it right here if I've made profits or if I've made losses. All right, so now let's proceed with this video. Now, I just told you the entry is the price at which your order is being executed. Okay, you can either be a limit order or it could be a market order. It could be different kinds of orders. Okay, it could be conditional limit, conditional market. But for the market and limit, they are the most prominent kinds of orders that you can have. All right, good. Market is when you buy at the current market price. Limit is when you set the price to either go lower when you are buying or go higher when you want to place a short position, meaning when you want to sell. All right, good. Now, the next thing we want to talk about here is capital. Okay, capital is your account balance, basically. Okay, how much you have in your account, meaning your margin. Okay, that is what capital is. Now, the position size. This is another very critical subject we need to also consider and talk about. Okay, now the position size is simply the number of contracts or units of an asset or coin you want to long or short. That's simple. Now, for instance, your BTC is at 20,700, for instance, and you want to buy some pieces of BTC. Now, how much of your portfolio are you using to buy that price of BTC? That will be your position size. All right. So the next thing we want to talk about right now is the risk amount. Okay, the risk amount. Now, this is the actual capital you lose on the trade if your stop loss gets triggered. Okay, if your stop loss gets triggered, this is the actual amount you lose on a trade. Okay, that is the risk amount. Now, let's say, for example, if you want to risk 3% of your capital on a trade, the risk amount is going to be your capital times 3 divided by 100, okay, which is 0.03. So let's say you have 1,000 USDT that you want to trade with, and you are using 3% of that amount to enter a trade, which is the risk amount, it's going to be $30 because it will be 1,000 times 0.03. You get what I'm saying now, right? So it's going to be $30. That's 3% of what you have. Okay, you have $1,000, 3% is going to be $30. All right, so basically that's just the way it works. It's very simple. All right, so the next thing I want to talk about is the leverage. All right, is the leverage. This is you simply borrowing capital from your broker or your exchange. We're not on Forex right now. This is crypto, so we call these exchanges. Okay, you're borrowing an amount to enter a bigger position than you would otherwise have entered. Okay, you would otherwise have been able to enter. All right, so basically that's what your leverage is. Now, how do you select your leverage? You come here on the FairDesk app, you just click on this 5x. You can see right here we have 5x, 10x, 20x, 80x, 100x, 125. Now, this exchange can borrow you any amount you want times this. Okay, let's say for example you have $1,000 and you want 5x. They will give you times 5 of that money, so you will be trading with $5,000. Okay, just like that. Now, if you actually want 125, you're going to be trading with $125,000, but you know how risky that should be. Okay, the more the leverage, the higher the risk. All right, good. When we start talking about different kind of margin modes, you get to understand better. All right, good. Now, we've talked about leverage. Okay, so the next thing we want to talk about is liquidation. Now, liquidation is the closure of your account. Let's say you forget to put a stop loss, or you just go into the trade, no stop loss. You just want to risk a certain amount of your portfolio, let's say 5%, and you do not put a stop loss. If that trade finally goes against you, I'm so sorry about that, you would be liquidated. You will lose your what? 5%. All right, so basically that's just the way it works. So I'm going to be talking about margin right now, and we'll call this a day. The margin mode has two categories. You have the cross, and of course you have the isolated. For the cross, you can see right here, it says all available balance of the account will be used to meet maintenance margin requirements and prevent liquidation. All corresponding available balance can be lost in the event of liquidation. Now, let me explain what this is. On the margin mode, listen and listen very good, okay? On the margin mode, when you are actually taking a trade, when you are taking a position, all right? Good. When you are taking a position on cross mode, you are using your entire margin to service your leverage. Yes, that's what you're actually doing. You are using your entire margin to service your leverage. Let's say you have $1,000 in your portfolio and you don't put a stop loss. Trust me, that trade is going to continue to move. Even if you hit your stop loss price, or sorry, even if you, what do you call it now? It's actually going to continue to move for the cross mode and will eventually get you liquidated. All right, that's how dangerous it can be. But there's a good side to it, because if you're actually using a high leverage and a small percent of your total margin with a stop loss, you won't get liquidated. It will hit your stop loss and then the trade will end. And your risk will be smaller because you are using a high leverage and a small position size with a big margin. I don't know if I'm making sense to you. Now, let me explain it again. Let me reiterate what I just said. For the cross mode, if you are using a small position size and a high leverage, your risk will be smaller because you have a higher margin to service that leverage. Your risk is going to be smaller. And if you actually put a stop loss, safer for you, you won't get liquidated. But if there's no stop loss, your entire futures account will be wiped off in case of liquidation. All right, good. So that is what I'm saying. So even if you are entering a position size with $3, in case of liquidation, whatever you have in that trading account will be wiped off. you won't lose only the $3. But in the case of isolated mode, you will lose only the $3. In quest of explaining the cross mode, I've just explained what isolated mode is. Isolated mode, on the other hand, is you taking a position and isolating it from your total margin. All right, you're isolating the position from your total margin. For example, you go into a trade with $20. Let's say you use $20 to trade, and you still have about $1,000 in your margin, in your account balance, okay, your capital. If the trade gets liquidated, you will lose just $20 because you're on isolated mode. All right, so it is safer to use isolated mode when your what do you call it now? Your leverage is actually very small. Okay, when your leverage is small, you're on isolated, you really don't have problems. And when your margin is big, let's say you have $1,000 in your account and you're using $20 to take a trade, and you're using a leverage of, let's say, 5x, your risk is going to be very small. Okay, your risk is going to be very small. But when you're on cross mode, you can go as high as 125x leverage. Use a small percent of your margin to enter a position. Let's say $1,000 you have in your account. You can use $20 to enter a position, or rather, let's say $10 to enter a position, and use 50x. You won't feel it that much, because why? Your margin is big. Your margin is even more than what you have as your trading size, your position size, right? So basically, that is what risk management is all about. So guys, I'm going to see you in the next video. We're going to practicalize this, and don't forget, this is FairDesk. Sign up with this exchange, trade with them. Reputable exchange, very, very reputable. They give a lot of bonuses, sign up bonuses, trading bonuses. I'm actually trading right here with my bonus. You can see right here, I have about I think $30. I've made withdrawals over time. Okay, this is bonus. I've not funded this account. This is just a bonus that I'm using to actually trade, because I'm a partner with FairDesk. Okay, so they give me a lot of bonuses to make trades and all that. So cheers guys, I'm going to see you in the next video. Watch out for this. Don't sleep, don't dull. This is fairdesk.com. Peace out guys.